I don't know what this thing is, but it's in my house for some reason. Welcome back to Strongman Personal Finance, everybody. Isn't it kind of crazy that I'm in my room instead of driving in my car? Yes, I actually felt so strongly about this video that Jeremy Financial Education made that I had to make a video instead of spending precious time with my child. I'm just kidding. He went to sleep early. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And I was disgusted by this video that old Jeremy LaFufu set up. So let's watch and let's see what old Jeremy LaFufu has to say about I quit. He quits every day. The stock market manipulation is out of control. So Jeremy's one of the conspiracy theorists. I'm surprised he doesn't buy AMC. He's one of the conspiracy theorists that believes that everything's manipulated and the market's getting screwed over and retail investors are getting the shaft and it's not fair. Well, guess what, Jeremy? No one's getting the shaft. You just buy garbage stocks. But let's watch, because he said some very interesting things about index funds, which we'll get to in a second.
We got to talk about market manipulation in this video. Very, very big subject that I think needs to be discussed at a time period like we're in right now. And what I am seeing out there is a time period we're going through that this is kind of like the finishing wreck of retail, as I call it, and a lot of traps that are being set for retail right now as we speak. And I'm going to show you.
I actually like that, the wreck of retail. See, I've been calling this for the last year and a half. All the stoinks went up during the pandemic. Everybody got STEMI checks. Interest rates went down. Growth stocks did well. Everybody thought they were geniuses. You just buy Tesla, bro, and it just keeps going up and up and up and up. But eventually, when the economy starts to overheat, the Federal Reserve has to raise interest rates to cool the economy down. Okay? It's a lot of economics, but basically, the higher the interest rates, the less people are likely to borrow, the less economic activity happens. Now, the stocks that get hurt the worst when interest rates go up are growth stocks because their earnings are way out into the future, okay? But Jerry doesn't seem to understand that. But let's watch and see what he has to say.
A video here that I came across a long time ago that goes into market manipulation and how a lot of the funds will do it, how Wall Street will do it, and you're not going to find a lot of information about this, and I give this individual some credit for at least disclosing this, because what is talked about in this video, a lot of people are very quiet about this for obvious reasons, right? Now, first off, I want to start here with actually SoFi. SoFi, very popular stock in the retail community. It looked like it was maybe coming back just to fall back to pretty much
highly speculative, unprofitable trash. Interest rates are going up. Gas prices are going up. There's a lot of fears in the economy. Of course, stocks like this are going to get freaking wrecked. This was not hard to predict, LaFufu.
Right around new all-time lows for this stock here today. You know, a move like that for a big retail stock like that is very discouraging for the retail crowd. And if we think about what Wall Street ultimately would like, Wall Street doesn't really like people that are individual stock picking, because we're all messing up the market, right? If you look at like the biggest example of this would have been like the GameStop, the AMC situation, right? Of like, hey, you guys are screwing up the market. Like, get in line, buy the index funds, because like you're messing this whole thing up for us, right?
Now, when I heard this, I was like, oh my God, this guy does not understand index funds at all. Listen up. How does Wall Street make money? Think about it. They make it through fees, okay? Now, when you buy an index fund, which was pioneered by Vanguard, you're paying almost nothing in fees. And the company that hosts the index fund doesn't make a lot of money off of it. Now, you may think that's a crazy idea, because of course these companies want to make money. And yeah, it actually is a crazy idea. But that was pioneered by Vanguard, where they had the new concept where the owners of the funds would own the company, instead of the company being owned, the management company being owned by external investors, because there's a conflict of interest there. As an investor, you want low fees, but the owners of the company, if they have to answer to outside owners, they want to maximize profits. So what Vanguard did is they created a new system where as you buy a mutual fund, you own part of Vanguard. There's no external company trying to maximize profits or external shareholders that Vanguard's beholden to. You are the shareholder. Now, index funds are low fee. Index funds do not encourage trading. When you buy an index fund, you just buy it and hold it forever. That's the whole freaking point of it. Wall Street doesn't like that, okay? Wall Street likes active management, and they like people to trade. If you're a brokerage house, you make your money by fees and commissions. And you may say, oh, well, they don't charge commissions anymore. They're still making money, clowns. You think they're just going to do that for free? Wall Street wants you to trade as much as possible, because the more you trade, the more money they make. So why would Wall Street want you to buy an index fund? And on top of that, there's a bunch of active managers out there that charge high fees. That's how they make their money. And they directly compete with index funds, which are the exact opposite. It makes no sense whatsoever for Wall Street to want you to buy an index fund, because they don't make money that way. And the funny thing is, Jeremy personifies Wall Street, but to the unregulated extreme. Wall Street at least charges okay fees. I mean, their fees are still freaking high. But this freaking clown will charge you thousands and thousands of dollars every year or two to get his advice, to learn his knowledge. It's a freaking scam, okay? This guy is Wall Street in excess. This guy is screwing you, and it's disgusting. He has to bash index funds, because if everybody bought index funds, he wouldn't have a business or a livelihood. And he's losing so much money, and we all know it's true. He's losing so much money that he has to start pumping out freaking sponsorships, okay? You know he's desperate. It's obvious. If you can't see that, you're blind. He's losing money on all his stocks. His income's probably going down. He's a complete freaking wreck. And he's disgusting. And he doesn't understand the thing about how the industry works. I'm not a Wall Street industry expert, but it's common sense to me that Wall Street wants you to trade, like retail, and they want you to buy actively managed mutual funds. Jeremy.
And so the fact that retail wants to buy individual stocks, Wall Street for the most part does not like that. They like it if you're giving them the money, right? And they know exactly where that money's going. Oh, it's being deployed over here. So they get to add to positions before everybody else does and things like that. If Wall Street comes in, scoops up a bunch of shares, it skyrockets the stock up, they miss out on 20, 30, 40% on that stock. They're like, you could just cost me 20% on that stock because you bunch of retail, you just bought into that before I got into that, right?
And another thing I just thought about, Wall Street wants retail because they can trade against them. Because retail is so stupid half the time, they buy the most garbage stocks. I mean, look at his stocks. And what Wall Street can do is they say, well, it looks like there's this company called Tattoo Truckers Taint that's unprofitable trash and that has no moat. And get him to file their freaking reports on time. All these retail clowns want to buy it, and that's going to bid up the price. Maybe. I mean, it's been knocked down pretty recently. If we short Tattoo Truckers Taint, we can make a fortune. So, of course, Wall Street wants retail to trade. Of course they freaking do. Come on, think for a second.
And so Wall Street's very incentivized for retail to not actually be individual investors. They want them to just invest in index funds, things like that, even like ETFs, right? And you look at the ARK ETF. This is a big one that I think they want to destroy. And the main reason is Cathy Wood is looked at as kind of like, I don't want to call it like a hero to the retail investors. I wouldn't necessarily call it that, but like a big figure, right? Of like somebody that's successful that's picking individual stocks. And
she is not successful at picking individual stocks. All she does is buy futuristic sounding companies. Every meme stock in the planet, she freaking buys. There's nothing genius with Cathy freaking Wood, okay? And yeah, ARK deservedly has been punished because it is full of unprofitable trash. Probably the only company that's profitable there is Tesla. You know, that company's massively overvalued. But Wall Street just wants to screw you over. It's not because of the pandemic and all these stupid growth stocks got a bunch of money thrown at them by a bunch of clownish retail people. No, Jeremy. Sad, man. This guy, what is this down here? The Fedge Abundance? I thought it said abundance, but it says abundance. This guy's such a moron. Loyalty over royalty. Buy the dip and never trip. Outwork and outsmart. Abundance over scarcity. What is this? Is that a sponsorship? I need to go Google that. But God, man, is this what he needs to like convince himself that he's doing the right thing? You're not, Jeremy. You're a scumbag.
She gives hope to other folks that pick stocks, right? And so the idea is crush Cathy Wood, crush that ETF, and you'll be very discouraging to anybody that's in retail that was looking up to her a couple years ago as like a god. Now they look at her as like, oh yeah, she failed, her people are failing, then I gotta fail as well, right? So crush Cathy Wood, crush the ARK ETF. If you look at something like Tesla, there's an interesting trap that's being set up here with Tesla right now. Where
question. Would you build a website for a major brand with more than 200 million users?
Tesla's been doing obviously very, very well in the market. The trap that I see coming here with Tesla, and it's a trap I've seen before, is Wall Street is setting retail up for the folks that aren't getting into the funds yet and haven't like get thrown in the cards that have gone to index funds. They want everybody to kind of pile into a stock like Tesla that's popular in the retail community. And the reason being essentially is you see it's holding up really well. It's doing really, really well. And I can tell you as soon as things slow a little bit from the demand side because of, let's say, a recession happens. Let's say interest rates keep going up and not as many people want to buy.
You hear how he said Wall Street wants retail to pile into the stock? So first he says Wall Street doesn't want you to trade. He just literally contradicted himself. Wall Street doesn't want you to trade. They want you to buy index funds. And now he's saying Wall Street does want you to trade and buy individual stocks like Tesla. He just completely contradicted himself. Jesus, Jeremy.
Vehicles, things like that. Dude, they're ready to set that stock down 50% plus. They'll do it. They've done it before. They've held that stock down for many, many years before.
See, he's coping. He's just saying, basically, because all his stocks are being destroyed, and Tesla will be destroyed as well. It's a matter of time. It's an overvalued luxury car company. He's going to blame the Wall Street shorts and not the fact that it's massively overvalued. Because when Tesla goes, LaFufu goes.
Why retail bought in or other folks bought in, they gave up, they shorted, they gave up, they went long, they gave up, and they've done it before. They'll do it again with a stock like Tesla. And I even know a lot of people on YouTube, for instance, that have 80 to 90% of their entire portfolio in a stock like Tesla, right? Which honestly sets a horrible example for the market. I don't have any like stock that has even more than 20% in one stock, right? But they're trying to set that as an example, have everybody kind of pile in there, and then they'll kill that stock off as well, right? And all of a sudden, that will kind of be like, oh my gosh, like we can't even make money in Tesla now? Like, are you kidding me? This is...
Yeah, you're not going to make money in Tesla. I think Jeremy's right on that one. But Jesus Christ, guys, I'm going to cut the video now because I need to get ready for bed. Because I have a job. I'm not a grifter. But I'm a curse, bro. But it's just sad, okay? He's trying to pull every conspiracy theory out in the book to justify why his stocks are trash. And he's setting you up to prepare you for Tesla's decline, which will happen, okay? Don't listen to this guy. He's an idiot. He's a moron. He's a scumbag. And he will lead you down the wrong path. If you want to buy individual stocks, keep it to 5% of your portfolio. Focus on maxing your tax advantage accounts and buying broadly diversified total world stock market index funds. And you'll be just fine, okay? Anyway, that's it. Like, subscribe, tell your friends about me. Buy my book, Stop Being a Broke Loser. And y'all have a wonderful night. Ciao!